So it's been a nervous week as this theme of central banks potentially pulling away from their intent to do further QE, sort of driving markets ever since last Thursday's ECB meeting and some hawkish Fed rhetoric. We've had some weaker data this week that has brought, I think, risk appetite back on board, again along the lines of this central bank put still being in place as long as economies aren't showing clear signs of growth. And on that front, of course, next week we have some very critical central bank meetings. The FOMC and Bank of Japan up on Wednesday. Not in that order. The Bank of Japan, of course, first as Asian Wednesday rolls around. And then late in the U.S. session, we have the Fed on Wednesday. Key meetings as it's all about, are we going to underline the theme of central banks slowly pivoting away from quantitative easing, or do we see potentially divergence, for example, if the Bank of Japan goes further into negative rate territory or underlines its commitment on further bond purchases, etc. Meanwhile, the Fed, even though it's very unlikely to actually hike at this meeting after some of the recent data, there is some probability of surprise, but more likely if they are going to be hawkish, that they have hawkish guidance. And is the market prepared for that? I think probably not if they do guide hawkish, and I think the risks of that are higher than the market expects. So we could see a Bank of Japan disappointment where they don't do anything at all, try to signal that their intent to do something later on or rely on fiscal reforms where the Fed could be a bit hawkish, and that could bring, again, a very confusing set of reactions in markets. I don't think the reaction function is 100% clear here. It's quite clear if we do see both of those things, we see a stronger dollar. But if rates go higher, the initial yen reaction could get caught up the wrong way around. In other words, a BoJ disappointment looks relatively hawkish. See a stronger yen first, sort of an initial knee-jerk reaction. But if they're looking at the broader theme, I think it's yen negative if long interest rates are headed higher. There's been a long-term correlation of yen and long-term interest rates, yen weakness when we have higher long rates. So be aware of these factors and be aware that across markets, the focus on these central bank meetings is going to mean a lot for risk appetite, for bond yields, for all the currencies and how those currencies line up with these themes. So risk on, risk off, for example. If we see risk off, we're going to see the likes of Aussie and Kiwi the weakest. Risk on because the central bank put remains in place, and we'll see a weaker yen, and we'll see stronger risk on currencies. So a lot of potentiality around there. I think the market's going to be very nervous until we get to the other side of Wednesday. We also have two other minor central bank meetings, but these are going to get lost in the shadow of the BoJ and the FOMC. Those are the RBNZ shortly after the Fed meets, and then the Nordis Bank on Thursday. So stay on your toes. We're going to have a rough week ahead for volatility, and I think there will be plenty of short-term trading opportunities mixed in there as well.